Okay, guys, I've got a few community questions from you guys today, about 6 of them, okay, ranging from topics about how many months will the altcoin season last, when will the altcoin season begin, and more importantly, if the altcoin season will even begin in the first place. Looking into the Bitcoin monthly RSI, the stochastic RSI, he's asking me about my thoughts on those kind of things, asking me about my thoughts about my game plan if Bitcoin does break down below 70,000, asking me about the DXY correlation and reverse correlation to cryptocurrency and how to navigate that, and asking me if the price reaches an all-time high again, would that be a sign to take profits aggressively or ride out the rest of the cycle? So a few important questions here today, just while the market kind of stuffs around in this price region, not really doing much. We'll get these community questions done, and hopefully there's some valuable insights here for you today. So I've timestamped the questions down below if you're only interested in a select few of them. Let's get into it. Before we get into it, if you're going to be in the cryptocurrency market, if you're going to buy and sell cryptocurrency, you need to be on a good exchange. You're trusting exchanges to keep your money safe as you hold coins in the wallets on the exchanges, and you're also paying the money in trading fees every time you make a buy or sell. So it's very important that you get on a good exchange, a reliable exchange, and that's why I like the Bitunix exchange. In its 3.5 years of being around in the cryptocurrency market, it has not once ever been hacked before. That's exceptionally good. And if it is hacked, it has security information available, reserves information available, so that you can potentially get reimbursed on your funds that you may lose in a hypothetical hack, which again has not happened yet. On top of this, it is available to every single one of you watching this YouTube video. It is global, non-KYC. You'll have no problem signing up regardless of where you are in the world with no VPN required. That's insanely good for people in the USA specifically these days. And with my referral link down below, you can get an exclusive 15% trading fee discount just with the Wolves of Crypto referral link. So go ahead and use that link down below and get that 15% trading fee discount attached to your account for life, as well as up to $8,000 in rewards. You can see it on the screen right here where I've highlighted just by signing up with my referral link. So check it out if you're interested. Let's get into the content. First question here from James. He's asking whether the inverse correlation between the DXY and Bitcoin will continue in future. More, indirectly, he's probably asking why it's not working right now, how long will it not be working for, and just what is going on in general there. Well, if you don't understand what anything I just said means, first and foremost, you've got to understand what the DXY is. So the DXY is a chart that essentially measures the strength of the US dollar in relation to other currencies. When it's going down, the US dollar is getting weaker. When it's going up, the US dollar is getting stronger. That's the easiest way, most simplistic way, slightly reductive way to describe what the DXY is. Another slightly reductive example we can use to describe the DXY is when we see quantitative easing, which is when we see printing occur, when we see the government printing tons and tons of money. The DXY generally goes down, okay, because the value of each individual dollar is getting lower and lower. Supply is increasing, therefore the value of each individual dollar is getting lower, therefore the DXY goes down as the US dollar loses strength in regards in valuation to other currencies. Although it's not always true, because you can see printing occur on a global scale, in which case all currencies are simultaneously getting lower in value, and hence the DXY can stagnate. But the main point of this chart is not really what it is at all. The main point of this chart is our utility, its utility to us as investors. So generally speaking, the utility is this. When the DXY goes down, when the DXY is in a downwards trend, that is excellent for assets. It's excellent for cryptocurrency. When the DXY is in an upwards trend, it's very bad for assets, very bad for crypto. So we overlay the Bitcoin chart on top of the DXY, and what we can see is very clearly, right, when Bitcoin is in a bull market, the DXY is in a bear market. When Bitcoin is in a bear market, the DXY is in a bull market. This has happened time and time again. We've got our bull market here in 2021, Bitcoin skyrocketing, the DXY simultaneously going down. Our bear market here in 2022, the DXY skyrocketing to the upside while the bear market was occurring, right? These charts are inversely correlated. So when the DXY goes down, it's good for Bitcoin. When the DXY goes up, it's bad for Bitcoin. Now, the problem with this is that recently, basically, specifically over the last year, but even more so over the last 2 years, since 2022, really, because the DXY has been ranging, it hasn't really been a definitive upwards or downwards trend. We've seen this inverse correlation kind of dissipate. And in recent months, if we look at the DXY has been going upwards very, very dramatically, which should have been bearish for crypto. But instead, crypto nearly doubled in price from 60,000 all the way up to 110,000, okay? And even in the last couple of weeks, or the last month, I should say, the DXY has been going downwards, and so has Bitcoin. So the inverse correlation has not been working. Now, I would attribute this to abnormal market environment. The DXY is generally reverse correlated to assets in a normal market environment, but the problem is we are not seeing a normal market environment across the macroeconomy and traditional markets, and this might be some of the reason why this cycle has been so strange as well, by the way. So the best example I can bring to light and make this conclusion with is looking at the interest rates, which is here in red, in relation to the S&P 500. What we see is that pretty much on every single occasion, in fact, yes, on every single occasion, we have never, ever, ever seen the Federal Reserve raising interest rates during an S&P 500 bear market. It's never happened except for here in 2022, okay? So interest rates are very high right now in comparison to where they usually are, because we've never seen them raised in a bear market, and therefore in the bull market, which we've been seeing recently, interest rates are very, very high, and they're only now starting to come down. This is a very unique position. We've never been in a position like this before. The main tool that the Federal Reserve has to combat inflation, which is interest rates, have been risen during a bear market. Never happened before. And in my view, this probably explains why the DXY has been acting so abnormally and why the inverse correlation has not been acting normally. How do we know when that will end? Well, we don't know when it will end. We don't. We simply do not know. But what we can say is this. It's not like the reverse correlation has completely gone away. It's just more like the correlation isn't really there at the moment, because although the DXY has not been inversely reacting to cryptocurrency and vice versa, there also hasn't really been a positive reaction either. The DXY has just been pretty much ranging on a macro scale. It hasn't really gone aggressively up or aggressively down during the last 2 years. It's just been ranging. And so for the most part, I would say ignore the DXY at the moment. Do not worry about the DXY too much. Worry about the Bitcoin charts and the S&P 500 charts alone. So that was a very long answer to a very complicated question, which I actually simplified very, very heavily. Next question. What is your game plan if Bitcoin breaks 70,000? Will I sell? Will I hold throughout the entire bear market? That's the general question. So essentially, just to give context to this question, I believe that if Bitcoin breaks $70,000, the bull market will be definitively over, pretty much. Now, it's a little bit more complicated than that, because technically speaking, the 4-year cycle is based on dates, not on price. So there's no specific price point that Bitcoin could break that would definitively end the 4-year cycle. The only way the 4-year cycle would definitively be ended is if we got to the deadline for our 4-year cycle top, which is October this year, and we were not at the top. Only then would the 4-year cycle be properly broken. But obviously we can't just wait around and hope for the best. We have to actually react to price action. And in my view, if Bitcoin broke below 70,000, which would be a break below the most recent macro consolidation ranges high, and hence a break back into the prior macro consolidation range and a structural breakdown, as well as a breakdown into the weekly chart Gaussian channel, through which we have never recovered before. Every time we have broken into that weekly chart Gaussian channel, we have moved through it to the downside and entered a bear market. If both of those things occurred, which would line up with a break of 70,000, I would be happy to make the assumption that the bull market is over, even though we had not seen definitive proof from the cycle. So basically, $70,000 is the last level I could expect Bitcoin to hold and potentially form a low and go upwards again. If we go below 70,000, I see the chance of recovery as very, very low, slim to none. But the actual proof of that would only come through getting to October this year and not being at an all-time high. So it's a little bit of a nuanced situation, but as I said, pretty much from a charting perspective, 70,000 is the lowest I see Bitcoin being able to go. So this brings me to the question, what would I do below 70,000? Would I sell or would I hold? Now, I don't discuss my personal financial moves anymore. I don't think it's helpful. I think personal financial decisions are nuanced. They're not just based on charts alone. They're based on personal factors, which cannot be applicable to people watching the content. So I just choose not to do that anymore. I did in the past. But I will say this, if I was hypothetically holding up until the point of 70,000, I would sell upon the break of 70,000. That's all hypothetical, but there's no reason in my view to continue holding past that point. That is the area of last defense in my view. And if you were holding below that point, you would purely be holding with a dream, a far-fetched dream, potentially, of the cycle somehow miraculously recovering and playing out, and you'd be ignoring all of the medium-term and short-term TA, which in my view is just not something you want to be doing. It's a gamble. Next question, the Bitcoin monthly RSI and stochastic RSI seem to be suggesting the top is already in. I don't know if I agree with that as a whole, but I will say they don't look good. Let's start with the stochastic RSI. The stochastic RSI, yes, it has marked a sell point back here in March, but we went higher than we went in March. The stochastic RSI, just generally speaking, is a very, very inaccurate indicator. If you look at the top signals that it marked during December all the way through to November 2015 to 2017, it was marking tops the whole way up of the bull market. Okay, so it's not exactly an accurate indicator. It marked our top here in March. It triggered a complete signal, dropping back below the 80 point, and then the market just continued back to the upside. So I wouldn't be trusting the stochastic RSI in any real regard. In fact, it was at lows basically during the peak of the 2021 bull market. Okay, so it's just not a reliable indicator. I don't use it virtually ever. What I do use is the RSI, and yes, you are right to note that the monthly chart RSI is also not looking particularly good right now. For example, we do have a slight bearish divergence there in the monthly chart RSI, if not something like a triple top. But again, I wouldn't be taking that too seriously either at this point, because bearish divergences on longer term time frame RSIs are representing extremely diluted versions of the price action, and bearish divergences can last a very, very long period of time. Okay, especially when you're talking about one candle representing 1 month. Remember, one candle representing 1 month is a diluted version of the charts. We only need to go to October 2025 for the 4-year cycle to take place. That's only another 6 or 7 monthly candles. Okay, so imagine this is a 5-minute chart. If you saw this bearish divergence, you could easily see 6 or 7 5-minute candles, before the breakdown actually occurs. So it's diluted. It's not the best form of TA to look at. What I'd be more concerned about is actually something like the 1-week chart MACD. I'm not overly concerned about this either, but it's something I'd take a little bit more seriously, because structurally speaking, this has been a little bit more accurate. Okay, we still have fake outs. Okay, we had a fake out cross back here in 2022 in April. We had a fake out bullish cross, another one right here, and a couple of them back in May 2023. But we've actually seen a bearish cross here that's been validated by a couple of weekly candles since, and a breakdown as well. So that's something I'd be more concerned about. The point is, there are negative indicators you can look at on Bitcoin that suggest the top is in, and there also are plenty of positive indicators you can look at that suggest the top is not in. For example, you can go right back to the monthly chart, the chart you mentioned, and you can look at the exact same thing, which is the monthly chart RSI on Bitcoin, and you can see that historically speaking, there's a trend that Bitcoin does not top out until this diagonal line has been reached. That's happened for the last 3 cycles, and we have not reached that diagonal line. So in the same way that you're scared about the triple top formation or bearish divergence here, you could be bullish and saying, well, historically speaking, there's a trend that we don't actually top out until we reach this line here. We haven't reached it yet, therefore we haven't topped out. So this is the problem with relying too much on individual indicators. It's more nuanced than that, and there's always another side to the argument. Fundamentally, the 4-year cycle is the strongest thing Bitcoin has, and it should be trusted more or less until the end, or until there's very, very little hope of recovery, which is why I've specifically identified $70,000 as the zone in which there would be little hope from recovery from. Bearish divergences happen all the time. They happen throughout the entirety of the last bull market as well. Either way, look at the weekly chart, bring up the RSI. The entirety of the last bull market was filled with one big bearish divergence, okay? And we still went upwards. So it's not exactly, and also 2017, every single bull market. Of course, you're going to see momentum indicators showing signs of weakness during a parabolic upwards trend. In the word parabolic, you are suggesting unsustainable. Right? A parabolic move is a move that is abnormally large to the upside. It's abnormally large, which means it's unsustainable. So of course you're going to be seeing signs of weakness during that abnormally large move. It's very difficult to catch a falling knife. And if you reverse that, it's very difficult to, I don't know what the opposite of that saying would be, but you know what I'm trying to say. Fundamental point is, indicators are just indicators until they are validated by structural breakdowns or breakups. So I've got a couple of important questions here about the altcoin season. One of them being, when will we see an altcoin season? One of them being, how long will the altcoin season last? But the altcoin season as a whole is put into a bit of an uncertain position right now. Okay, we look at Bitcoin. Bitcoin is a 4-year cycle based on dates. The Bitcoin dominance chart, which represents the altcoin season, when the Bitcoin dominance chart goes downwards, that is synonymous with an altcoin season being seen, happening. And so historically speaking, there has been a trend that the Bitcoin dominance chart would drop for 315 days. Okay, and that 315-day drop would end at the precise point that the 4-year cycle suggested the top would be in. This happened on 2 separate occasions. Right now, it also looked like it was happening here in November. We saw Bitcoin reach an all-time high in November at about 110,000. 315 days from that point would be the end of the bull market as per the 4-year cycle, and hence it made sense to assume that the altcoin season was beginning in November. I was saying in November, it's likely that the altcoin season has begun based on that trend. I still stand by that. If you reverse time and put me in the same position, I'd say it again. But unfortunately, we've seen a deviation here. We've seen altcoins seeing weakness, and we've seen Bitcoin dominance starting to rise again. Now, the question is this. Bitcoin dominance hasn't quite breached that level properly yet. It hasn't quite made a new high. And so it's not definitively true to say that we are still in a Bitcoin dominated market because we have not breached that high properly yet. This could still be a deviation. Given the fact that the altcoin market, the total 3 cryptocurrency market cap, is on the edge of a cliff and hence at a crucial decision point, we could see a scenario in which this Bitcoin dominance chart quickly swings back to the downside, everything in the market pumps and altcoin season begins, and it was as expected, and that was a slight deviation. Or we could see a scenario in which everything continues going downwards and Bitcoin dominance continues rising, and we completely annihilate this Bitcoin dominance trend, and hence we have no idea when the altcoin season will occur. We are at a crossroads here. It's very difficult to know when the altcoin season will start, if it has started, because it could have already started here by definition, or how long it will last, because we simply do not know what will happen next. If the Bitcoin dominance chart continues upwards, this trend breaks and we are in the dark. If it swings downwards here and everything starts pumping in the market, and we see that altcoin season continue, we can expect it to continue until October and end in October as expected, as per the 315-day trend. It's probably the worst time you could have asked me this question. We will know probably within a month, but right now it's at a very dangerous crossroads. And I think this is echoed throughout my Bitcoin videos right now. Bitcoin's in the same situation. We're at a crossroad. We can't spend too much time in this region. The more time we spend here, the more damage is done to the trends, the more damage is done to the structure as a whole. Same story for altcoins right now. The Bitcoin dominance chart in the altcoin market is on the edge of a cliff. And if it does go down a little bit more, if it breaks, for example, this 2.5 year long support line of the RSI, everything's kind of ruined. So altcoin market is in a position of massive uncertainty, and that's why I've kind of avoided talking about it, because there's nothing really to say until we get more clarity. And the final question, Wolf, with the recent correction, the break of the key level, it gave me a reality check on the fragility of the market. If the price reaches all-time highs again, should I take profits aggressively, or is it wiser to wait until Q4 for the 4-year cycle top to play out? Now, obviously, that's a personal financial decision, so I can't really give you any real advice there. But what I will say is this. If we did recover, and if Bitcoin did go back to all-time highs, and if the Bitcoin dominance chart did swing downwards here as per the trend suggests, everything will look quite good again as per the cycle, and I would see no real reason to immediately expect the cycle to be invalidated and break. So I'll leave you with that information. But taking profits is always a good idea. You should always secure profits, of course. Thank you for watching, guys. Hope you enjoyed. Hope you got something out of that. I know there's a lot of uncertainty in the market right now, and that means my capacity to answer some of these questions is severely limited. That's just the name of the game right now, and we've got to stake it out and wait for clarity. So thanks for watching. Check out the Bitunix exchange. As I mentioned at the start of the video, it's global non-KYC. You can sign up from anywhere in the world with just an email address and a password. You don't need a VPN. You don't need to be from a specific location. You can be from anywhere. So that's very, very useful stuff. It's never been hacked before. It's been around for 3.5 years live. People have been trading on it for 3.5 years. Not a single hack. Extremely good stuff. Hundreds of trading pairs, very low in trading fees. And with my referral link down below, you can get a 15% trading fee discount added to your account to further minimize the cost of this exchange. Excellent stuff with that referral link down below. Check it out if you're interested. And the last thing I'll mention is my VIP group on Telegram. If you want to get altcoin trading signals 4 times a week directly to your Telegram account, you can get them on my VIP group. You also get access to a group chat with 160 other members where you can discuss the market 24/7. Appreciate you guys. Have a good day.